What's up, everybody? We're back. I'm going to go ahead and now that I'm back here, I am going to take a 1/10 of a position long and look to build up a long into the close of trading today. So one small contract at the moment, or one of the big contract at the moment, and I'll be adding to that position. I just wanted to have a little in to catch the move here, since we expect it to move further. Let me know if people are showing up. All right, so back in long. I'm sure there's a lot of people out doing other stuff and stepped away, but whatever. So added to position. Second ad here. I just added again. So I've got a full live position here now. Or 1/5 of a position. But just added here long. Let's have a look at what's going on across the market. All-time highs. We've got S&P, Dow lagging, NASDAQ, of course, and we got Russell firing up. Kind of waited for me. I had 86.61 exit. What was my exit on this? 62.40. 6 exit time. What did I exit at? 11:10. and then back in again at 12:45. And that's trend continuation. We got in at what's my average price here? Average price 1663. The 1662 stop. And we have what's called a gap. That was a big spike. Something happened here. Some news happened here or something. That was a gap of, so we closed at 1663.40 and opened at 1663.50. So there's a tick skip right there because somebody was buying as fast as they could. You'll see what happened is we went so basically we had this top reversal, which bears got in short, and the last bear had their stops up in here. Okay, so this thing moves up, and then any other bear that's still looking bearish probably put their stop here. So as soon as we got above this high, we sprinted above higher to run those stops. So bears buy stop to cover. There's no more real bears up until we get to this level. So we're looking at 1670 level next. That's really the only thing in front of us. Oh, it's not trade wise. It's Trader View. So that's just the name of the game here. Just stepping up, stepping up. This isn't always in long over here. Pretty much from that bottom. Let's take a look at what it looks like on the 10. Looks a little more obvious, always in long. Here we are. Okay, so always in long. All we're doing is any excuse to get long, any excuse to add to the position. Okay, 10-minute close. Let's look at we've got the 4 hour. Basically, let me do it. The 4 hour closed here in bull mode, bull mode, bull mode. We are in full on bull mode here. So it's just any excuse to be long. So I got anything, yeah, everything right now, always in long. Blasting off. Everywhere we go. I'm going to add to my position. Doubling position now, long. So I've got two out of the 5 full position. Average price has me in at 1663.3. So I doubled my position and added 30 cents to get it. So we should be kicking off here. Remember, 1670 is what we're looking at. $16.65 is next intermediate resistance, then 1670 is where we're looking at for the next move. Well, there we go. That was nice. You just keep adding, always in long. There's absolutely no reason to short here. This is all always in long. This is just an always in long. Looking for any opportunity to get long here. And we are doing so. Drop it down to the 5 minute if you can't find a reason to get long here. Maybe put if you're not long yet, you're going to want to maybe put a buy on a dip down into there. You're not going to get it. It's just going to rock, huh? Looks like it's just going to take off. All those poor bears who are sitting there crying about the coronavirus and being angry and calling the market top and everything like that are just getting sucked into this right here. There's just no reason to be short, none whatsoever. I mean, almost got as much from my position earlier, but had to pop out here. We're making it back. Okay. Any reason you can convince yourself to get into this is what you're looking to do. And yeah, it's just any chance, any opportunity. This is an always in long market. What's up, Eric? Hmm. Be right back. All right, we've got 45 minutes until the end of equities. Moving on your left. Eric, no, SQN on lower time frames does not influence me at all, especially in futures, because 2/3 of the trading day or 3/4 of the trading day or 3/4 of the chart is outside the trading hours. Has absolutely nothing to do. Don't try to get too, I know it's exciting when you see a new indicator and how somebody's using it to start looking at all the different ways to do it. But SQN is simply a calendar. Think of it as a calendar. It lets you know that it's, January, it's going to be colder outside. In July, it's going to be warmer outside. Maybe in the spring, it might be a little harder to understand. That's all it is. It's just telling you what the weather's like. And then you can make a decision from there. So you don't get caught up into using SQN as something that is a be all end all sort of indicator. All it's doing, the only thing you should be using it for is to tell you, actually to help guide you into the environment you're in, as opposed to what trying to optimize towards it. I want to move away from over optimization. A lot of people want to just start stacking indicators and start stacking things on it to give you a really good, like hopefully the highest win rate possible. But that'll just, like, all this was, if you can see, it's a lagging indicator. And so we were in bear volatile all night long since Friday. And we're in bull quiet, and that's on a 10-minute. It has no relevance whatsoever to the short time frames. Stops. What are you talking about? My stop would probably be around 1662.3 on a 10-minute bar close. So it can trade all the way down into 1610. And if it doesn't close below 1662 on that 10-minute, it's not a stop. So understand that my stops are not hard stops. There you go. Another reason to get long here. As soon as we take out this high, boop, more buyers stepping in. That is, aggressive shorts will have been shorted here. And longs are just kind of like wishing that they bought here, wishing that they bought here, wishing they bought here, definitely wishing they bought there. A lot of them are just sitting there watching it run. So we got high 65.3, 65.3, didn't put in a new high yet. We're waiting for that one more tick above it, and that should give us a little volatility and a bit of a reversal. No, sorry, Buster. I'm not going to do that. All right, okay. All right, okay. All right. Stop the body rock. Don't stop the body rock. High dot 3, let's get dot 4, and let's get, if we can break dot 4, we should be able to get another little spike. The 65 area, remember, this is resistance. So we could probably hit that 65.6 range if we get above this high. We could spike there and then get bored. Overall, I'm looking for the 70. Not sure if we're going to get it by the close, but they do love to have some round numbers in their arsenal, don't they? There we go. Softy up above. Flix has got nothing for me. Check out the Googs, new highs. Okay, we did get the new high. We got 5.4, broke that high. Right, this is new resistance. As you can see, that was broken Friday on the open. That was a Globex low, so we're probably going to have some resistance there. But overall, I'm looking for the 70 into the close if things stay healthy. There we go. Yeah, I'll be exiting on the close today, somewhere around there. We'll see. 65 is a good spot to be looking to lighten it up if you're antsy. I'm looking for a move to 70. This thing just melts up as I'm expecting. So this is good. This will be bringing bears in. They're going to place their stops just above. Bears are going to be looking, if they're getting short, they're going to put their stops right above here, which we've successfully taken out 3 times. That's higher highs, higher highs, higher lows, higher highs, higher lows, higher highs. So one thing I want to point out is we had, let me put it on the RTYH 2020 clean chart for you. So bears were looking, I think I have this tool. Forgot how to use it. Okay, that's what I'm looking for, curve. So let's just flip that. So here's what we had earlier. We had a head and shoulders. Okay, so left shoulder, right shoulder. Bears were seeing this and seeing to themselves also lower high, lower low. Bears stepped in here. Okay, so bears got aggressive down in this area. Lower low, lower high, another lower high, expecting lower lows, and bulls took them apart. This is what happens in a bull market. When you're in a bull market, the best short setups get destroyed. So you had a lot of bearish traders trying to get in a short position here. And as soon as you can see, as soon as we double bottomed here and double bottomed here, or bigger double bottom here, it's just straight rip, right? Always in long from there. And I mentioned this one earlier with that head and shoulders top. Bears were that was going to give us fuel. That's going to give us fuel because bears are going to be feeling a little more cocky. They're going to be feeling a little more pep in their step to take that sort of trade. Buddhism. So that brings that rocket fuel in. Now that we've blown past all that stuff, now it's bears are no longer looking to, bears got stopped out all the way. So that gives us a lot of buying. And then that wakes up the bulls because suddenly the bulls are looking to say, oh, we want to be in here too. So they're jumping in, and we've hit a point to where that is no longer the case. And so bears are just able to get another little bit of traction here, and they're looking to probably take a dump below, take it down and get it to dump like this. The thing is, we've got, we're back in this area here. So we're long. At break even, or 1663. And so we're looking to, we will take our stop if we're wrong right in here, but it's on a closing basis. I don't see any reason to be looking to go short or take any profits on this. So I don't see any reason to sell here. We definitely had selling. So there were some people, some longs were taking profits. 1665, it's a nice round number. It's an easy, clear target. So people are going to hit that. And that's one reason we stop at 65. Also, recall we have that spike low down on the Globex from Friday, 70. And then right in here on Friday, we spent a lot of the morning banging around in this general area. And it just never really worked. So there's a lot of price volume. If we were to put up a if we were to run the market profile and we could see what volumes there, you're going to see more volume in this general area here. So that's the one with the histograms on the side. You know, we're going to be able to see that volume there. And so like I could do, oh, it didn't go on. Okay. No, we need it to go. Well, as you can see, yeah, that was from Friday's. So we would do, let's do like the close. So this is the last little area from Thursday, Friday, the close of Thursday to Friday. There we go. We're breaking through it. New highs. All it is just add. Always in long. Find a reason to be long. Add to your position. Just add. So we could do all of last week. This is just February. So if you're wondering where all the volume's at, right in here, and the next level we're going to get any resistance is going to be, well, like real resistance is going to be the 1680 level. Okay. Well, I'm not going to say that I hated taking that little break. Yeah, I was averaged in this area and basically got in here. So I kind of missed about half a point. Lightened my position by 1/5. But that's okay. So had to lighten it. Had to go to the doula appointment to see, help my wife with the birth. And that was nice. Run the Jews fast. Run the Jews fast. Yeah, but equities are in a perpetual bid. I mean, it's Nick, SQN. Yes, absolutely. It works on equities, indexes. Doesn't work on commodities all that much, but yeah, absolutely. Not commodities, on currencies. And I didn't build it. It's Dr. Van Tharp. That's his indicator. I just coded it up into TradingView and made it available for people. So no reason to take credit for that one. Yeah, in currencies, it doesn't work very well because currencies have no, I mean, kind of, but there's no perpetual bid on currencies, and a lot of countries are incentivized to have a weak currency or a strong currency. So you're not going to get a lot of. It's not going to work well with forex. Let me get some water. Another reason to be long, take this out. Anytime you get high, by the close of any one of these candles, by the dips anywhere, there's just always in long. I can't wait to get out of here and go get a haircut. Which I am going to do as soon as I exit this position. A little haircut, come back and do some furniture building. Fire up the end of day. We're going to do live Forex position updates. and futures contracts end of day. That will be at 6 p.m. Eastern time. I'll put a tweet out for that. If you're not following me yet, follow me on Twitter. I'll post most of my stuff there. And otherwise, we're just watching this into the close. Literally, if you hadn't gotten long and you're sitting here watching it, what are you thinking right now? You're sitting here watching this thing tick up, wishing you were in. That's why it's called always in long, and it's just you're looking for any excuse to get in your position. Yep, FOMO, exactly. Yeah, they did get stopped out. They're squeezed. Shorts got squeezed. Look, if you're watching the news and getting all caught up in this coronavirus stuff and super bearish and just angry and cranky about this whole thing and shorting Tesla and shorting the Qs or shorting anything in a massive bull market that's only about 6 to 9 months old, thinking that you're shorting the top of a 11-year bull market, you're wrong. It's not 11 years, it's only 6 months. And you're listening a little too much to what the cranky, angry Twitters are talking about. We're just sitting here printing money because we are not trying to outthink the thinkers. We are just playing along with the market. It's telling us to be long, so we're long. It's telling us to ride it and add to our position, so we're doing that. This price is truth. What you read on the news and what you're hearing out there is not truth. What do you think is the most likely thing that's going to happen into the close? You think it's going to turn and fall to the bottom, or you think this thing's going to rip? More than likely, we're going to rip. The only other thing that it could do is just bang around here. But as far as like, there will be a little selling when traders get done with the end of the day. And understand that the Russell is a trader's contract. It's not a big bank's contract. So there's not a lot going on here with the big funds, big traders. They're going to trade the NASDAQ futures. They're going to trade the S&P futures, the Dow futures. The Russell, they may take a position in, but it'll be through calls, looking to catch. Now, when we get NASDAQ hitting its measured move 96.20 top, which is 120 points higher only, that was my projection. Doesn't mean it's a top. It just means that that's a magic line I drew on a chart. That's all these things are. So what does that mean? You're probably going to start seeing people moving to try to catch this equilibrium trade where small and mids catch up with the big caps that have been running. All right, I think I'm going to go ahead and take it when I can right now. I'm exiting. I'm going to sell all at market. All right, I dumped. I'm out. Let me do the math on this. What do we get? So that was 62.40. That was 3R today. Looks like we exited at the right time. Yeah, that's exactly what it is. It's just, this is just traders exiting the end of the day. So we're going to want to get there. Most likely this is going to get bought and we're going to rip into the higher close. I'm just interested in getting a haircut. Like, I really want to go get a haircut bad. So I'm going to go get a haircut bad. Yeah, thanks, Pablo. 3R. Yeah, not a bad day. Yeah, Louis V, great easy day across the board, actually. Everything. The only reason we trade RTY is because, well, I'm already in NASDAQ swing position long, and I just like trading RTY better than any other instrument during this. So, any questions before I wrap up? Oh, the song's over. Should I go left or right to the haircut? Basically, I live right in the middle between two of my favorite barbers. One is to the left when I exit. The other one is to the right when I exit. One is a few minutes further away. The other is a few minutes closer. Actually, I'm going to go right. Yeah, it's a much better shopping center or whatever, like, area, because I may find myself eating a In-N-Out burger or something like that after. Well, looks like we exited right at the right spot. Again, any questions? I'll take a few more before I roll, but otherwise, I'm about to be on the road. Let's see what NASDAQ's doing into the close. My count's popping. Oh, there we go. It's not gold. It's definitely NASDAQ doing it. Okay, guys, make sure you subscribe if you're not already subscribed so you can get notified when I go live. I am going live in a couple hours to cover my end of day swing trading. And then I'll probably be live the next couple of days. And I'm going to do some talk. We're going to talk about getting into prop trading if you guys are interested in to get into prop trading. I will detail it in action. All right, y'all. I'm out then. Great trading day. Actually, I think we're probably going to get, this is going to, if you didn't exit yet and you're still looking to do it, this is going to move. We'll probably get that 1670. We could get that. And if not, then after hours. I just don't want to sit on positions while I'm leaving. So there you go. Looks like, yeah, we're getting our 1670. Melt up. This is what happens into the close. Okay, guys, I'm out. See you.